episode 1. I'm very excited. This is Crystal, the groomer's accountant, and welcome to Beyond the Shears, where groomers get business savvy. And so today we're kicking off our very first episode with a special guest that can bring some important information to an incredibly important topic, which affects all pet groomers alike, whether you own a business or you're an employee within a business. So that is the misclassification of employees versus the independent contractor. I know it's this industry is rife with misinformation with this topic. So I want to make sure that we get the exact information that we need in order to make sure that we are doing things correctly within the business. So today's special guest is Robert Nordlander. He is a CPA and a former IRS agent who spent 20 years in the Criminal Investigation Division. He's been seeing firsthand the costly mistakes that business owners make when it comes to worker classification or misclassification. And today he's going to share his expertise with us. So, Robert, thank you so much for joining us.
Thank you, Crystal.
And so I've been really excited to get you on with this episode, and I have a lot of positive feedback. Everyone's super excited about this. So before we dive in, if you can share a little bit more about your background and then what you're currently doing with Nordlander CPA.
Thank you. It's a pleasure being with you, Crystal. I enjoyed law enforcement and had it. My father was an accountant by trade when I was growing up, and I watched a lot of Miami Vice and Chips and those types of TV shows when I'm growing up. And I always had this thing for law enforcement. But my dad said, "Listen, if you get a degree in accounting, you can go anywhere in the world and get a job." And I was like, okay. So I went to college and then got an accounting degree, and then ultimately started working with him in a small CPA firm right after college. And in the meantime, I became what they call a reserve deputy sheriff, which means I was CPA during the week and a crime fighter on the weekends. It's kind of like
Nice.
right the opposite, right?
Yeah.
So it was interesting, and so I enjoyed that career. And after that, for about 2 years, I taught at a university, and decided I was about 29, 28 years old. So, you know what? I've always wanted to be in federal law enforcement. Let's see what we can do with this. And ultimately, I ended up getting a job with the IRS Criminal Investigations, which are special agents that carry guns. And people think of Secret Service and DEA and Homeland Security and ATF and FBI. Well, the IRS has a law enforcement function. About 2,500 of us would be gun toters, and we use our accounting skills to go after tax evaders and money launderers. That's what we do. In order to get this job, you have to have some type of accounting or business background. So I got that and started my career just chasing tax evaders and money launderers. And ultimately, I retired after 20 years of doing that and started a CPA firm called Nordlander CPA. And it really focuses on what they call forensic accounting, which is how to use accounting in court, because that's what I did for 20 years with the IRS. And also I do tax resolution, which means how do you solve these large tax problems? And one of the things that I noticed when I was investigating tax crimes is many of the small business owners had employee problems, tax problems. Independent contractor versus employee. That wasn't always an issue. If there was a mistake or misunderstanding, it's one thing. It's not really criminal in nature. But when it was intentional, uh, common situation would be construction workers, right? You bring in a bunch of individuals, they come in, they do your roofing, and many times they were illegal immigrants, and they would get paid get paid cash,
Sure.
and then they would do another roof and another roof. So they're working for the same their crew working for the same guy multiple times. Are they employees or independent contractors? At the end of the day, they're really probably employees for various reasons, and so they would get themselves in tax problems, particularly criminal tax problems, because if people are intentionally, willfully not following the law, that is a crime.
Yes.
And based upon the dollar amounts, the higher the dollar amounts, the more attention you'll get with the IRS.
Sure.
And so that's what I ended up doing.
Awesome. Thank you so much. Yeah, it seems to be that it depends. Well, basically, I tell my clients it's all about intent with the IRS, and it really is. Because sometimes we honestly can just simply not know because you don't know what you don't know. But then, if you're, like you said, trying to get around having to pay taxes or having to do the due diligence, then the IRS will definitely come after you and put that criminal stamp, so to speak, on it. So,
Right.
yeah,
You have to earn it almost, that
yeah,
criminal stamp, but
yeah,
people do.
they do. They absolutely do. And so it sounds to me, though, that the 1099 classification is not just within the grooming industry, but in a lot of industries. I'm sure you've seen it across the board for sure. And okay, so for me, I've had a lot of business owners, as far as with the grooming business owners, that will say something like, it's perfectly legal for me to have a 1099 employee. Of course, by the way, guys, that's not real. That's a 1099 employee is not a real thing. Um,
No, it's an
it
oxymoron,
is,
yes.
exactly. And then one of the biggest things too is I also hear, I bought this business from so and so, and they've always done it like this. They've always had
Mhm.
1099 employees, so I don't understand why it's such a big deal now. But I want to start, if you don't mind, with how the IRS defines what a 1099 independent contractor is versus an employee. Can you tell us the difference?
Yes, there is no bright line
Okay,
regarding all this. There is a document out there that the IRS uses to determine which side of the fence you should be on. And for the most part, everybody's an employee for typically. If you have a continual relationship with someone, I always use an example of the plumber or the HVAC guy or your car mechanic. They're probably not employees because you use them once or twice and that's it. You're done. You're over with them, right?
sure.
But if someone has a reoccurring relationship with you, there are some tests, we call it tests, questions that the IRS will ask to determine whether or not they should be an independent contractor or an employee. Some of the main ones are, do you set the schedule of this individual? In particular for the pet grooming, right? It's really similar to the hairdressers,
Yeah.
right? It's just
Hmm.
you just different person, right? Get a dog or a cat
Yeah.
versus a
Human.
human being.
Hmm.
Do you set the schedule for this person? So if you start scheduling them like, okay, you're going to be here from 9 to 5, that has the taste of an employee versus an independent contractor.
Sure.
As an independent contractor, if I get my plumber to come in, I, I got to sit there and say, yeah, I got to make an appointment, but that's it. I'm not continually making appointments with him, that type of thing, right?
Yeah.
So that number two is who pays the insurance? If something should go bad, right?
Hmm.
Is it the groomer or is it you know, the person who's holding the grooming business in itself?
Sure.
Who's paying for the supplies? That's another thing too.
Absolutely.
If I have a janitor or a cleaning lady that comes in once a week for me, am I giving her the supplies or is she bringing her own supplies? That has the taste of that type of thing. Who can show up if they're not showing up? For example, if I have a cleaning lady, she comes in, and then one week she's sick, somebody else comes in on her behalf. I don't care, right?
Sure.
Just clean my
Get the
house.
job done. Yep.
Right. For groomers, that's going to be a problem. Typically you just can't rotate your cousin into the grooming shop and
Mhm.
say, "Oh, here, this is a person's independent contractor. They're allowed to bring your cousin in." You'd be kind of upset,
Yeah.
right? So that has another flavor of um, independent contractor versus employee. So the IRS looks at these types of tests. Who gives the uniforms? Does the groomer wear a uniform, or are they, if they're independent contractor, they can wear whatever they want to wear, right? So
Exactly.
you have a lot of these tests. So for the most part, by default, really in this type of business, it's usually in the grooming side of things, they're an employee.
Yeah.
Tips. Who gets the tip? Are you splitting the tips? And then you start getting into that issue as well.
Hmm.
Who's doing the billing? Does this person have access constantly to the facilities?
Hmm.
A lot of questions like that. And when you look at it from the standpoint, when you start answering these questions, it typically lies on the employee side,
Sure.
and it really doesn't matter. And I understand this when people buy another business because this is consistently a problem.
Hmm.
They buy a new business, and then all of a sudden, with this comes the baggage. I call it the baggage,
Sure.
right?
Absolutely.
The other people who are there, they've been there for years. You're a new business owner. You've kind of inherited these people, and they say, "Well, I've always been paid this way." Well, just because you've always been paid a certain way doesn't mean it's the right way to do things. I have a client now who got some bad business advice and turned, I consider, an employee into an independent contractor. I came on board and I said, listen, this person is not an independent contractor, an employee. We need to start treating them this way, which causes the independent contractor they're upset.
Yeah.
Well,
Yeah.
sorry, the rules are the rules. I get in trouble as a business owner
Mm-hmm.
if I don't follow the rules properly.
Yeah.
I get penalized, and if I do it willfully with a bigger number of people, potentially it could be a criminal issue.
Mm-hmm.
So, follow the rules. So I can say I don't make the rules up just because I work for the IRS. I
Yeah.
mean, we don't. I don't get a commission off of this stuff,
I know,
but I'm here to
exactly.
protect them in the long run.
Yeah.
You know.
That's what we do as accountants, right? We have to keep people in compliance. Like we know what the rules are. We tell them what the rules are, and it's ultimately up to them whether or not they choose to follow those rules. But,
Hmm.
at the same time, we're like, okay, but here are the end results that could possibly happen, which we'll get into that here in just a little bit. But I know a lot of people that will come in and they'll be like, well, in order for me to get around this employee situation, I'm just going to have this person sign an independent contractor agreement. So, can you kind of explain why that alone does not indicate that they are an independent contractor?
The IRS does not care.
Yeah. Yeah, exactly.
They just don't care. If it looks like a duck, talks like a duck, acts like a duck, it's a duck. I
Yeah,
don't care if you sign a piece of paper that says it's not a duck.
exactly.
It's what it is. Now, a piece of paper can be binding, maybe regarding the relationship that they have, between one another and the rent and whatever else or do whatever they're doing. But when the IRS looks at it, they're going to sit there and say, "Oh, just because you have an agreement between one person and the other, doesn't make it legally sufficient for tax law purposes.
Sure.
It may be for small claims court if
Okay.
you have a dispute among one another." But when the IRS comes in, or even the state, give you an example,
Mhm.
California, they are very notorious when it comes to employee versus independent contractor
Sure.
in how they enforce those laws.
Mhm.
So maybe the IRS may not get you, but the state definitely is. Most of them are more aggressive,
Yeah.
and they're not gonna look at it they're not gonna be as kind as you think they will be because you got a piece of paper.
Exactly. And we run into that a lot. And I tell people, I said, the biggest audits that I've ever had are not even with the IRS, it's with the state agencies.
Hmm.
It's with whether it's a withholding, but especially unemployment. And then when you get workers' comp involved, that's a really big deal. So,
Oh yeah,
yeah.
yeah. You have a dog that somehow bites
Hmm.
you, and all of a sudden I get workman's comp. It's like, well, wait a minute here.
Exactly.
If you're an independent contractor, you don't get
You
it, but
don't
an
have
employee
that.
you do.
Hmm.
But now all of a sudden they got bit. Well, I'm no longer an independent contractor. I'm an employee. Well, what are you talking
I
about?
want those protections. What do you mean I don't get
Exactly.
that? Exactly.
Exactly.
So, Robert, in your opinion, like what are some of I know you shared with us a little bit, but what are maybe a couple of really big red flags that the IRS looks for when investigating whether or not an employee has been misclassified?
Well, one of the first things that they look at is whether or not there is the proper paperwork. What paperwork I mean is there a 1099 or a W-2 issued?
Sure.
Yeah,
Okay.
that's number one.
Hmm.
If you do have a 1099 that's been issued, that typically is, maybe an indicator. It's some indicator that it's done correctly. Doesn't necessarily mean it has been done. That's one. Number two is not keeping the books and records. How much did you pay these people, especially if you paid them in cash?
Yeah.
That's another red flag they're looking at is this person got paid $1,000 a month in cash
Hmm.
versus a normal check like a normal human being would get.
Yeah.
That type of thing. Another thing would be is um, how they look at this stuff is how are they advertising? Is the person who's the independent, quote unquote, independent contractor, are they advertising themselves as an independent contractor or they're saying I work for ABC dog grooming business?
Exactly.
They're looking for those telltale signs of that. Usually it's cash and the reporting requirements are really the two main things.
Yeah.
So
Yeah, it can get really messy whenever you're merging. That's kind of what we also tell these business owners when you're merging multiple, groomers under one roof, and you're trying to make
yeah.
them these independent contractors. What is the outside public seeing? Whose sign is on the
Hmm.
storefront? What are they calling into just one phone number, and you're using one booking system to
Yep.
make appointments? Are you using
Yep.
one payment method to take payments, or do you have what I know a lot of hairstylists do? They will actually have certain booths, and we can get into booth rental here soon, but they have certain booths that they will have. Now, we also obviously tell them, but if you're working under one name, that's not an independent contractor, that's an employee situation. So that's where I think a lot of things
Right.
come.
Right. Yeah, the hairdressers is another thing too. It's
Yeah,
like you call one phone number, you get Janice, and Janice will do all the stuff, and then typically the receptionist has money goes through that one computing system, right? That type of thing. It gets kind of messy, honestly.
yeah,
Um, because yes, you can have people that rent booths,
hmm,
and they can be independent contractors. You're just running the risk of they may potentially could be employees, because like we talked about, did they wear the same uniform, right? Who's giving the supplies, who's doing the training? There's a lot of stuff. If it acts like an employee, it is an employee.
exactly,
You know.
exactly. And so, um, a lot of the things that people don't understand is that you have to be able to see the mistakes that you're making and be able to backtrack on that. So let's say that, a business owner is caught misclassifying employees. What are some of the penalties and legal consequences that that business owner could face? If we could just take it from maybe both sides, either it's just a misunderstanding, and then maybe get into the more criminal intent that, yeah, I've been told to do this, but I'm not doing it anyway.
Well, when they reclassify employees, one of the big things you're going to be looking at is called the Social Security tax, which means that, okay, you pay this person $1,000 a month. We think they're employees, so now we're going to treat them as employees. So now you're going to owe the Social Security tax, that type of thing, and the unemployment tax on these individuals. That would be one. And then because you didn't classify them properly, and I don't know some of the exact penalties on some of this, but I do know that they will go back and penalize you for failure to do X, and typically it's going to be failure to file the right forms.
Sure.
So they're going to figure out what you owed 3 years ago,
Hmm.
and now your penalty is going to be based upon what you owed 3 years ago plus the interest.
Plus the
So
interest.
they're not going to go give you a clean slate today. They're going to figure out how much you owed 3 years ago, and then calculate the tax, and then there'll be a penalty associated with it. And I can just about guarantee about 25% of that type of thing. So, you owe $10,000, now you owe, 25% more,
Yeah, because
1250,
you
just
have,
because.
I know you have the failure to file, you have the
Yep,
failure to pay on the quarter, because most of
correct.
these are quarterlies. It's not just like one report, it's a quarterly report. And then you
Right.
have your federal unemployment, and then your state unemployment. So you
Mm-hmm.
have all of these that you're having to deal with. And then if you live in a state that has a withholding or income tax, then you're going to have to file for those as well. So we're talking a significant amount of money of back taxes that are owed, and in penalties and interest. So that's why it is such a financial devastation. So you want to make sure that you're doing this correctly, 100%.
Correct.
Yeah.
There's the failure to file is 5% per month for 5 months, which is
Hmm.
25%, and the failure to pay is 0.5%,
Okay.
up to 20, which is like 50 months. So not including interest. So the bottom line is that it's not uncommon for, I'll give you a bigger number. It's not uncommon for $100,000 tax bill, whatever your $100,000 tax bill ends up being. It ends up with the penalties and stuff. It ends up being like 125, 150
Yeah.
within a few years,
Yeah.
easy.
Yeah.
Not including interest. So it's a pretty big stick the
Yeah.
IRS uses.
In your experience, with the IRS and your position, what was one of the like most major I guess, criminal repercussions that you've seen? Meaning, is it just a financial liability, or is there also like incarceration that could possibly come with that?
The most people misunderstand the IRS criminal side.
Mm-hmm.
You have to just about deserve it to get there.
Okay.
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 Um, it's not a 56 going in a 55-mile-an-hour zone. It's typically going 85 in a 55-mile-an-hour zone, weaving in and out of traffic, giving a middle finger to everybody, and throwing out beer cans out the window. I mean, you really have to just about deserve to get into criminal trouble. That being said, once an investigation starts, okay, there's no paying it back to get out of this.
Okay.
So once you get the knock on the door going, hey, there's a criminal investigation on you. Oh, I'm sorry. Let me write you out a check.
Mm-hmm.
My bad.
Mm-hmm.
Here you go. The answer's no. We're
Yeah.
done. Now we're trying to make a public example out of you. You paying your bills, fantastic, but incarceration potentially is going to be, is going to be in the cards sooner or later. Ultimately, the federal judge determines who gets incarcerated, who doesn't. But usually when IRS CI, when we get a case like this, we know generally what the sentencing is going to look like.
Okay.
There is a guidebook out there by the courts that they use that will tell you if you owe the IRS $100,000, it'll be so much months in prison. If you owe the IRS $1 million, it'll be so many months or years in prison. So
Sure.
there's a guidebook out there. So we kind of know generally what happens. Most of the cases that I saw regarding the employment tax side of things was not really CI showing up, knocking on the door, saying you've committed a crime. It's usually the business owner getting in trouble civilly, where a civil auditor came in and did their little, slapped them around a little bit, gave them a penalty, gave them an interest, and then they try to collect. And then when they try to collect, then the business owner started doing things squirrely. They started paying in cash. They started lying to the revenue officer who's trying to collect. They decided that they're not going to abide by the rules, and they start putting things in a girlfriend's name, not their name. They shut down the business, start business number. They shut down
Yeah.
business A, start business B.
Sure.
Right?
Mm-hmm.
And then when business B gets in trouble, they start business C.
Mm-hmm.
Well, it's called pyramiding.
Okay.
And that kept on going on and on, where the civil side got so frustrated with the business owner, they said enough. And then they referred it to criminal side, and then the criminal side steps in and makes an example out of you.
Sure.
That's when you get punished.
Yeah.
So when the business owner gets in trouble civilly, my advice always is just tell the truth or get good representation first. But once you owe the money, go through the appeals process, what you got to do. But at the end of the day, frankly, don't do illegal things because you got caught civilly.
Okay.
Is my point.
Yeah.
It's always the cover up that gets people in trouble, never the crime itself.
Sure.
And that's usually where small business owners get themselves in trouble, is not really getting caught initially by CI, but the civil side has just done all they can do, and they're still frustrated with the taxpayer because the taxpayer is just acting like an idiot. That's what it comes down to.
Yeah. Okay.
Yeah.
All right. Well, let's say that we have one of these grooming business owners and they've misclassified employees in the past, but they're like, okay, oops, my bad. I see the error of my ways. What should they do now in order to correct those mistakes with the IRS? Like, what are some of the steps that they need to follow?
Well, if you come in from the cold going, yep, I'm sorry, I messed up. Are you asking if they did it on their own, or if IRS forced them to do so?
I'm assuming there is a difference. But let's say they found out on their own. Let's just say they're Good Samaritan and they wanted to actually fix their mistake.
Well, what I would recommend as a CPA, and this is when it comes to ethics, okay?
Sure.
If there is a problem, if I come to a client and say, you have a problem here. Last 2 years, you had an independent contractor, they should have been employees, you have problems. Here, I'm obligated by ethics to let them know, here's what's going to happen if you don't fix this. Potentially what could happen, you could fix this. They get to decide whether or not they want to fix a previous problem.
Okay.
And then, so I let them know this is what it is. Now, whatever they decide to do is fine with me. I didn't do that. They did it. So if they want to fix it, I'll help fix it. If they don't want to sit there and say, nah, I don't want to fix it right now, fine. Going forward, we're going to do the right thing, of course, right?
Sure.
So they have options.
Okay.
Many times with the IRS in disarray, I'm of the opinion of just go forward, be a good citizen, and let the past be the past.
Yeah. Yeah.
That's just the way I look at it.
Gotcha.
Now, that said, if there is a criminal element to this, where they really, really misbehaved, okay, then you have to get an attorney involved. But my recommendation, if there's a criminal element, is to fix it. Fix it, a couple years back. Take your lumps civilly, and then go forward, because it's very hard for an IRS special agent to prosecute someone who fixed the problem.
Sure.
I mean, what do you do? Put this person in jail. Why? Because he fixed the problem. Well, that doesn't give you. No judge is going to put someone in prison for that.
Yeah.
So they're not going to. If someone fixes the problem, the potential for jail goes down to just about zero.
Okay.
So if there's, I call really bad behavior, I would go back a couple of years and fix it.
Gotcha.
If it's just one of those civil issues where, we really don't know, it's always been this way, there's no criminal intent here, it's just, we didn't know, I say just go forward and go on.
What's an example of what you would deem as really bad behavior? That way I can kind of get a idea of what you mean by that.
One would be that it's on a large scale.
Okay.
Okay. It wasn't just like one person. It was all 10 of them.
Gotcha.
Or all 6 locations. That things that would give CI a reason to open up a case. Another one would be is that if they're currently under audit or potentially under audit, or maybe the audit caught 1 year but didn't catch the 3. Right? So they may be in trouble 1 year, but deep down inside, if they expand this thing, we're in trouble.
Yeah. Yeah.
Right? So my recommendation would be is fix all of it. Before the revenue officer, revenue agent looks at it and starts saying, oh, there's indicators of fraud here. They're doing this, they're doing that. Sometimes, they may find something. And if that's the case, I would do that too.
Sure. And there's a lot of business owners, we kind of mentioned this previously in the beginning of the podcast, whenever I'm inheriting a business that the previous owner has been doing this. Now, I know what I would typically say, and that is, I would just do, if you're buying a business, I would just buy the assets only at that point, and then just kind of let that business name go away, and then you open up your own and do it the legal way. Is that something that you would also recommend?
Yeah, buy the assets, never buy the business.
Yeah,
don't buy the stock. You buy the stock, you're buying all the problems.
With it. Exactly.
With it. Yeah,
exactly.
Yeah. That's exactly what it did. Now, there's something else that we didn't talk about. Maybe you were going to talk about.
Sure.
That you may have in the dog grooming business or any other type of business. You may have a situation where you haven't filed at all.
Okay.
For years. What do you do with this? And it could be the groomer itself or the grooming business, right? One or the other. Because the answer is the same no matter which side of the equation you're on. The IRS typically goes only back 6 years.
Okay.
So if you haven't filed a tax return since 1985, well, the IRS practically it's impossible to go back to 1985 and fix this thing to file the returns. So the IRS has a policy that as long as you're within 6 years, they would consider you compliant.
Okay.
So go back 6 years and then file the returns and then go forward. Now, the civil law, when it comes to the IRS law states that if you are a failure to file, if you did not file a return like you're supposed to, there is no statute of limitations on that.
Sure.
Which means that technically the IRS could go back to 1985, figure out what you owed, and then send you the bill. Practically, they don't do that, but can they legally do that? Absolutely. So just realize that a failure to file keeps what they call keeps the statute open, which means there's no statute of limitations. They can go back and redo this. And the IRS also has the power. It's called 6020B, 6020B,
Okay.
and that is the tax code that allows the IRS to estimate your tax.
Yes.
And then give you a tax bill as if you didn't as if you did file, and then start collecting on it. So they can do that as well. And then of course, when the IRS estimates, it's always in their favor, never in your favor.
It's
so
very high.
it's very high.
Yeah.
Yeah. Exactly. So the point being is that if people want to come out of the cold and get into compliance, 6 years is the number.
Okay.
And what I typically would recommend is finding a tax professional, CPA, an enrolled agent, or an attorney who can represent them in front of the IRS to, number one, get the tax returns filed, right?
Sure.
And then figure out some type of payment plan or what we can do regarding this. There's like 7 different ways to fix a tax problem when it's owed.
Sure.
And a good tax professional can tell you which of the 7 areas you qualify for. Most people only qualify for 2, which is an installment agreement, which is nothing but like a car payment, right?
Sure.
You owe the money, you can make payments until it's in.
Yeah.
What some people get into themselves in trouble to is that they stay up way too late watching TV, and you see these pennies on the dollar.
Yeah.
You know, and you see this nice old couple going, "We owe the IRS $1 million," and they're hitting a golf ball.
Yeah.
And by going to so and so, we got pennies on the dollar. We paid $700 and got $1 million wiped out.
Exactly.
Well, is it possible? Yes. Is it probable? No. If you are if you're on a golf course, okay, and qualify for this program, you're working there. You're not playing there.
Exactly.
Because you just about have to be bankrupt in order to qualify for this stuff. And what happens is that these shady tax resolution places will take your money, take $5,000, $10,000 off of you, and then file the form knowing that you don't qualify. The IRS rejects it, and then they say, well, we tried, right?
Yeah.
Well, they knew very good and well you weren't going to get it. You didn't qualify to begin with, but you took your $10,000.
Yeah, they got paid. They didn't care.
They got paid. They did what they promised to do. Now, the kicker is this: is that if you do owe the IRS has 10 years to collect that money.
Okay.
So when it's owed, they have 10 years to collect. On these offer and compromises, these pennies on the dollar,
sure,
it gets paused. Which means as long as the IRS is looking at this thing, okay, your 10 years gets paused. So let's assume that you paid this person $10,000. It took the IRS 2 years to figure this stuff out. Well, now they're going to start. They start the clock back on again after it's done. So now you've been waiting for. It's been 12 years now.
Sure.
So it's just a bad idea to go to these shady places. Get some true tax professional help.
Absolutely. Absolutely. And then also with that, whenever you do get the debt, I guess, so to speak, canceled, is that when you get the 1099-C, the cancellation of debt? Do you have to pay that? How does that work with the IRS?
No.
Okay.
If you do have a 1099-C, I don't think the IRS does doesn't double down and make you owe tax on the money that you just got canceled. Sure. Yes. I will tell you this. When it comes to what they call offer and compromise, the pennies on the dollars, if you do owe the money, the IRS will take pennies on the dollar, but you have to be almost bankrupt to get this, to qualify for this.
Sure.
But here's the kicker: you got to keep your nose clean for 5 years. So if you ever owe the IRS any money or don't file a tax return on time, they rip up the agreement, and now you're back to square one.
Oh, wow. Okay.
So there's a lot of people who they have bad behavior, bad habits, right? They get the OIC, they get a clean slate, they go back to their old habits, and the IRS says, wait a minute, you owe us money. The agreement's ripped
We're
up.
done.
We'll start back from square one again. Thank you very
Hmm.
much. And all of a sudden you're like, really? Yes, that's how it
Hmm.
works. So 5 years to keep your nose clean. And if you get a refund, the IRS keeps it.
Oh, yep, exactly. A lot of people don't realize that. They're like, "Well, I'm getting a
Yes.
refund." Like, no, they get it first.
They're gonna keep that
Mhm.
sucker. Yes.
Exactly.
Yeah.
So yeah, just really good awareness for everybody out there to make sure that you understand if you owe the IRS and sometimes even the state sometimes hop on board if you owe the state money and get any kind of refunds. If you get a refund from the state. So yeah, it's both ways.
Yep.
Absolutely. And then, so I wanted to go back a little bit to the business owners and about the employees and discuss a little bit about the paperwork that is required to make sure that the business owner is classifying these employees correctly. So,
Hmm.
what are maybe some policies and procedures they can put in place to make sure that they're doing things right out the gate?
Well, the first of all is when you have individuals coming and working for you as a business owner, you got to make sure you have your I-9s, which show that you're legally allowed to work here in the United States, and you got your proper identification. Um, in my opinion, it is so cheap these days or inexpensive to have a software service, payroll service to do
Sure,
all this.
absolutely.
Let them do that thing because frankly, it's just way too much, too many potential mistakes
Hmm.
for a business owner to do their own payroll.
Hmm.
You can go to Patriot, there's ADP, there's Gusto.
Hmm.
There's a lot of payroll companies that do these things these days
Yeah.
that will set you up. I mean, I got clients now that you punch in, punch out, it automatically
Hmm.
uploads it. They get paid, gets automatically deposited in people's bank account, and it's really inexpensive for the business owner to keep that uh, payroll service be compliant in the payroll issue.
Yeah.
Um, what you don't want to do is get yourself in trouble. This is one of the things that I talk about in one of my books is withhold taxes out of people's paychecks
Hmm.
and not turn the money over on time.
Mm, yeah.
Huge penalties involved. Number one. Number two, it is a crime not to turn that money over. It's considered in trust fund taxes. So when you pay the employee and you withhold money out of their paychecks, it's not really your money, business owner. It's the government's money. And the government, when they don't get their money, they're going to consider it theft.
Yeah,
That's just how
absolutely.
it works.
Yeah.
And that's the premise on how they do that. So small business owners get themselves in big trouble regarding not paying the payroll taxes, not turning it over. So when you do have a payroll service, be sure that the taxes are withheld
Hmm.
and that the payroll service is turning that money over,
Sure.
to the federal government and filing the proper forms.
Exactly.
I don't know why some payroll services will do the forms and not turn the money over, but this unsavvy business owner may think, "Oh, I got someone took care of this," and they have more money in their bank account than they should because they didn't pay the taxes over, and no one asks any questions. And then 3 years down the road, the IRS is looking at you saying, "Where's our money?" And then all of a sudden, you've got all these penalties and interest because you weren't paying attention. So,
Yep, I just had a client that went through this, not a groomer, but another client, another industry.
mhm.
They just went through that and they had actually, believe it or not, an accountant that was doing their taxes, a CPA, and she did not pay it correctly and she never initiated the payment. And so it just was never paid. That's a little bit different. But the
Yeah.
thing is, I always recommend to my clients to make sure that you check your bank accounts, make sure the money is coming out on a regular basis. If you don't see a payment, then question like why? Like where's this payment? Shouldn't this be going out? And especially in the beginning, keep up with it. Make sure you understand
Hmm.
what the payment dates are. They're pretty consistent with both the IRS and the state. So you know when they're supposed to come out and be withheld. So for sure.
At the very least, check every 6 months.
Yeah.
I
Yeah.
mean, it should be earlier, but at the very least, every 6 months, check it just to make sure things are done right.
Hmm.
It's a lot easier to fix something within 6 months than it is 6 years.
Yeah.
Yeah.
So now this is question time. I know we've been asking a lot. I've been asking a lot of questions, but these are some questions specifically that I have actually, I guess, compiled and gotten together from a lot of these online groups that I've been members of, admin of, and things like that. So I'm just going to kind of get your professional opinion
Hmm.
about some of these and what you would do this as a former IRS agent, or even as, in your current role as a CPA, helping people with tax issues, right? So one of the biggest ones that I hear right now is, well, I use all of my own tools and equipment, and I only share things like the bigger things, like tubs and tables and like dryers and things like that. Am I considered an independent contractor or not?
Well, for the most part, probably not. Once again, there is a list of questions that helps the IRS separate between independent contractors and employees.
Mm-hmm.
That may be one item, okay? That's a plus as an independent contractor. But the question is, are there minuses in other categories that would make that? I'll give you an example. It's not uncommon for a auto mechanic company, right, to require their employees to bring their own tools. And the reason why is because if the business owner buys the tools, they somehow go missing,
Yeah. Mm-hmm.
right?
Mm-hmm.
So they say, hey, listen, these minor tools you will have to bring yourself. And so they have to bring their own toolbox because this is their stuff, right?
Mm-hmm.
Are they independent contractors? No, they're still employees. But because of theft, right, of the tools, they sit there and say, you're responsible for your own stuff.
Yeah. Okay.
And then there you go.
Makes sense.
Yep.
Absolutely. Yeah, and so I get that a lot. And honestly, I try to tell them, I'm like, there, like you just said, there's multiple layers to this. It's not just, okay, I supply my own items, my own supplies and tools, therefore I'm good because I'm doing this. And the thing is, they don't realize that they're actually shooting themselves in the foot. And honestly, in this business, like, it's not really, conducive to want to be an independent contractor, because you do want those protections, especially, grooming live animals, because the risk of getting hurt is much higher than in, like, for example, like we
Mm-hmm.
do sitting behind a desk, crunching numbers, basically. Their liability goes through the roof. And so therefore, again, like you mentioned earlier in the podcast, it's, who is paying for that, that vet visit? If the dog gets hurt, then who is paying for the workers' comp if the employee
Right.
gets hurt? So you have both sides of that. Because that's another thing that a lot of the groomers will ask. Well, I accidentally, hurt one of the dogs that are on my table, cut them with some shears or something.
Oh, yeah.
And now all
Who's
this,
responsible?
who's responsible for that? And so
Mm-hmm.
as an like a quote independent contractor, typically you should have insurance coverage, like liability insurance coverage
Yep.
for that. And so therefore a lot of these employees, I'm just going to call them employees because that's really what they are, do not have individual coverage. So therefore, is it out of pocket? Can they be sued? There's a lot of like legalities that you have to maneuver through with that.
Right. And so the bottom line is that once again, it's a weighing machine.
Mm-hmm.
You may have, I bring my own tools on one side, but everything else says I'm an employee on the other side. So it's a
Absolutely.
weighing machine.
Yeah.
I like it contending. It's like, just because some guy gives you flowers doesn't mean you're dating.
Exactly. That's a really good analogy. I like that.
I mean, it's a clue, but it's
Yeah.
not necessarily everything.
Exactly. Exactly.
Exactly. Yeah.
Well, one that recently was brought to my attention, and of course, I just kind of had to roll my eyes with it a little bit, but somebody, and this is from more the employee perspective, the employee side. So an employee said, I agreed to be an employee at a specific groom shop, but at the end of the year, they handed me a 1099. So what would they need to do about that?
A one-time occurrence. A one-time occurrence, in my opinion, I would let it slide and roll with it and go on.
Okay.
That's just me. Because it's not worth the time and hassle. Because you're trying to untangle the spaghetti. It's gonna be very difficult to untangle the spaghetti.
Okay.
The business owner or IRS agent side of me says, what were you thinking when you got paid to begin with? You had to get a W-2. You had to get a paycheck that showed, here's your income and here's all the taxes taken out. If you're getting something from the business owner, then there should be a pay stub, right? If there's no pay stub showing taxes taken out, you got to ask the question, why is there not taxes taken out? Because if they're not, they're treating us as an independent contractor,
Absolutely.
which is a different story altogether. So
Hmm.
my point is, you should be able to nip this thing in the bud within their first paycheck.
Yeah. Like, where's my paycheck?
Exactly. And
Hmm.
not wait, 6 months, a year down the road, and all of a sudden, Eureka, I'm an independent contractor. Well, you should have known that from the first payment you
Yep.
got,
Yep.
right? So that's how that is. I mean, you could, if you are, I was an employee, not an independent contractor, could you go out there and make hay out of this? You could, but man, it is just difficult because more than likely they, being the business owner, have sent the 1099 to the IRS, right? And you got a copy of it. So now you got to tell the IRS I was not a 1099, but I was an employee, and then you got to have tax. Then you're going to get there's a different form altogether.
SS8. Yep. Hmm.
Yeah,
Hmm.
there's a lot of stuff going on that
Hmm.
at the end of the day, I wouldn't mess with it.
Okay.
I just roll with it, but that's just me. But
Okay.
you know,
So,
the right thing to do,
hmm,
the book way of doing things. That there is a form that you can say, "Hey, I was an employee, not an independent contractor, and here's what you do." That is the book answer. Go right ahead. Um, it depends on the amount of money and what we're talking about, of course. It's one thing to work there for a full year, it's another thing to work there for 2 weeks.
yeah, yeah, some of these are
Yeah,
shorter term. Yeah, I see what you're saying.
exactly.
Yeah, it's just kind of like, how much time are you willing to invest in actually trying to get this done if you're only there like a month or two at the most? Is it even
Hmm.
worth it? So yeah, I mean, I get that. I know inside of our group, because we do, I'm an, I guess, a admin, so to speak, to this group that's called 1099 Misclassification, group run by Debbie, and she has spent many many years building up this group to bring awareness into the pet grooming industry that
Hmm.
this is not right. Like, here's the information. She's curated, like, I don't know how many hundreds of websites, and showing even from state to state how this is an issue. And I know you previously mentioned California. In California, you can't even pay people commission, over there. Like, they're very strict. And so basically, we do kind of tell people that we're trying to fix the mess that's within the industry. And we do encourage people to do the SS8 if they know that they're getting a 1099, especially if they were told that they, were an employee, so to speak. But we also do 100% agree with what you just said, where, why didn't you know this from the beginning? Like, why did you not get your statement to show, or your stub to show how much taxes were taken out? Now, a follow up to that question is, I've heard this a few times. My employer took out taxes. They did take out taxes, and then they gave me a 1099. So to me, that's just outright fraud, and that's theft. What we just,
That is fraud on the
mhm,
on the business owner. So
yeah,
the question you have to figure out is, do I still want to work for this person?
absolutely, yeah,
Because that is fraud number one on that side. Number two is it's fraud against the government. So it's a fraud against them as well as the government.
hmm,
Here's the problem with some of that
okay,
is usually when this happens, and people need to think long term, whether you like the Social Security Administration and the whole idea of a safety net, it's a political issue, right? But if you're not paying into the Social Security system, you don't get anything out of the Social Security system. So when an employer does that, claiming you as a 1099, they're not claiming all those taxes to their Social Security Administration. So you get a big goose egg for the year
sure,
of suppose that you were an employee. The answer is no. So when you decide, when you get turned 60, or when you start getting, or you get yourself hurt or whatever else it is, the government's going to look at the system and say, well, how much have they paid into the system? And the answer is nothing, because the employer doesn't reflect anything, right? And so they end up getting defrauded.
yeah,
They're doing all this work. They're doing what they're supposed to do, and then at the end of a couple years, they don't get the benefit because their employer screwed them over by not reporting it properly to the Social Security Administration.
mm,
So it's a big deal.
yeah. That's
It's a
something.
big
That's
deal.
something people don't even think about. They're
Yeah.
paying into Social Security. I'm like, no, you're really not. because
Nope.
you're not an actual business owner. Therefore, as far as taking the deductions and being treated as an actual business, you're not. You're just simply a person that is working for someone for straight income, and then that's it. So you're not getting any of the benefits really from it.
Right.
So yeah. Um, Another one that I had was specifically dealing with mobile grooming and
Hmm.
franchises. Okay.
Hmm.
So I'm going to read this one. It said, I was recently hired as a mobile groomer for a franchise. The franchise provides the grooming truck and their logo is on the truck, but they are treating me as an independent contractor. Is that right?
Well, once again, we go back to the rules and
Sure.
questions.
Mm-hmm.
Are you wearing this person's uniform?
I'm sure.
Yes. They're
Obviously.
giving you the truck? Yes. They're
Mm-hmm.
giving you supplies? Yes.
Mm-hmm.
Are they telling you where to go?
Sure. I'll
Yes.
imagine.
Who's paying for the insurance for the truck? That. What
Mm-hmm.
happens if the dog gets hurt or you get hurt? Who's paying for that? All right. More than likely, it's an employee.
Gotcha. Yeah. Because there's
Now, it's not uncommon for for a person to be a mobile individual
Mhm.
and run their own franchise, run their own section of franchise or
Sure.
just a franchise in a
Oh,
certain like Austin,
franchisees.
whatever.
Yeah.
Yeah,
Yeah.
franchisees. Yeah, yeah,
Mhm.
yeah. It's easy. That's
Yeah.
easy.
Yeah.
But just because someone slaps you, puts you into a van, it doesn't mean it makes it worse actually.
Mhm.
As an independent, they're more likely an employee.
Okay.
The question is that who's using the van?
Mhm.
I mean, is the van like shared to where Janet gets it one day but Mike gets another? I mean, it becomes one of those issues. Like independent contractors are who they are, independent contractors. So if you're sick, can you have your cousin, Nina, show up and do this stuff? Probably not. So it's more likely an employee.
Exactly. Okay. And then one of my favorites, and I always get this because typically when I'm asked this or this is told to me, it's typically in angst and anger. So,
Hmm.
well, I've spoken to my accountant and they said 1099 is legal. It's either accountant or lawyer, a tax lawyer or tax attorney. And they say 1099 is legal. And so, what would be your response to that?
1099s are legal.
Okay.
We're not disputing whether or
Mm-hmm.
not 1099 is legal or illegal. The
Mm-hmm.
question is, do you qualify for this? Number one. Number two is, I'll call your bluff. Show me the documentation from this person's letterhead that states that they know all the facts that you've given to them. Based upon these facts, blah, 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 you're an independent contractor. Guarantee you they don't have it.
Yeah.
And the reason why is number one, they never had the conversation.
Sure.
Number two is they contacted someone who is not licensed. They asked their next door neighbor who has no idea what's going on, and supposedly they, quote unquote, they are a CPA, but really they're a bookkeeper from the local community college,
Sure.
which is fine. I have a problem with that, but don't put label CPA as somehow that these people. It's one of those things in the industry where everybody who does books is their CPA. That's not
Mm-hmm.
technically true.
Yeah. Yeah.
There is a you call it hierarchy, licensing level, whatever you
Level
want to call
level
it.
education. Yeah.
Yeah,
Mm-hmm.
level of education out
Mm-hmm.
there. Um, so I'm gonna call it BS
Okay. Yeah.
because a tax attorney is not gonna is if you're really getting advice, they need to. It's all remember it's all fact
Mm-hmm.
specific, right? We do this, 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 and this. I think you're an independent contractor.
Yeah.
Lay it all out.
Exactly. And I remember when I was doing, like back in the day when I worked for a CPA firm, we would have multiple audits, and specifically unemployment audits that would come
Yeah.
in. So I had the pleasure of speaking to several different auditors, and that all pretty much gave me very similar, descriptions as far as what the independent contractor versus employee is. And I said, like you mentioned previously, we go into an audit basically knowing that this person is an employee, and the burden of proof is then on that business owner to prove that that employee is not really an employee, they're an independent contractor. And they did.
Shocking that the IRS is going to take a position or the government's going to take a position,
Mhm.
and you have to counter that.
Yeah. Yeah,
The
exactly.
burden of proof is on you to
Exactly.
prove them wrong.
Exactly.
Some people have been in relationships quite a bit like just like that, right? The
Yeah.
burden of proof is
Like we have the burden of proof that we have to actually show and prove it. I know she said some of the things that they do recommend, obviously, is that invoicing. Like for example, An employee gets paid on like a weekly, biweekly, semi-monthly pay schedule. They submit the number of
Mhm.
hours, it gets approved, and it gets paid. An
Yep.
independent contractor either is by project, by job, and they submit an invoice on letterhead typically, and they have
Correct.
payment terms on that. They
Mhm.
have to have an independent contractor agreement signed. Therefore, both parties fully know that that's the situation.
There's some type of engagement letter between the two parties.
Exactly,
Yes.
explaining like
Mhm.
who's going to provide what and when. And essentially, it just says that you're hiring me to do a job. I can bring anyone, like you said, you can bring your cousin on to do this job if you need to, because you have a staff, yourself or subcontractors that will come
Mhm.
in and do the work. And so that's kind of what it basically spells out. And she said that you also have to prove another thing, guys, and I want to make sure that I make this clear, is that you're typically not working for one location either. If you are a business owner and you're going around, you're doing things in multiple locations for multiple businesses. So
You got multiple customers.
exactly, exactly. You're
Mhm.
not just sitting in one spot. Because I know I
Mhm.
recently had a conversation with someone and she said, well, I'm an independent contractor. My attorney said so because I specialize, I have a certain skill set, I have a certain grooming technique that I use. And I was like, and I told her, I didn't tell her she was wrong because I said, you might be the one exception to the rule here if you do have a specialty. It's like for example, my husband's a tile setter and he does go into other businesses, but he does certain techniques that they bring him in for, right? So, and he has his own business. He goes to multiple locations and he does his own work too. He has his own customers. So that's why he can be that way. But of course, she was upset. She said, "You know, you're practicing law. You shouldn't be doing this." Of course, I'm like, "Okay, I'm disengaging with you. No, no, no." I've told people, and that's what I tell people. If you're not sure whether or not you're being misclassified, you can always just do the SS8 form to send it to the IRS so they can give you the letter saying, yes, you should be an employee. Now, it's not a speedy process by any means, and especially right now, with everything that's happening, again, not getting political by any means, but it's just a lot of things are being backlogged, and that's
Yeah.
probably going to be one of them right now, until things get a little situated in DC.
Mhm.
And so therefore it's good just to make sure you keep your notes. But if you think that you're being misclassified, go ahead, make sure you gather all the information, make sure you check your paid stubs, make sure that the taxes are coming out properly, make sure they're getting paid, and so therefore you're getting the benefit, like he said, with the Social Security. So I want to kind of start wrapping us up here, Robert. If you could give one piece of advice to pet grooming business owners when it comes to dealing with the IRS, then what would that be?
If it's worth the money, okay, a $500 is not probably worth the time. But if you start getting up to 10,000, 20,000, for sure, 30, 40, $50,000, you have these type of problems, you need to get tax professional help. Someone who knows what they're doing, has been around the block a couple times, to help solve some of these issues. The IRS has horrible customer service. And
Yeah,
unless you know what you're doing, you will bang your head against the wall trying to solve a problem. And then in some cases, I've seen business owners create bigger problems. They try to do the right thing, but if they got professional help and spent the $3,000, $4,000, whatever the number is, right, they would solve themselves. They would have less issues to deal with.
sure.
So yeah, the biggest thing is I can say is number one, pay your payroll taxes. Number two is if you do getting yourself in trouble or you think yourself in trouble, at least get some professional advice. I'm not talking about your next door neighbor who happens to be, who
Who
has a
does
thought,
taxes? Yeah, yeah,
who does taxes on her kitchen table.
exactly.
Get someone who's licensed,
Hmm.
licensed being an enrolled agent, CPA, and attorney,
Absolutely.
who can represent you because only those three people can represent you in front of the IRS to help resolve this issue. We have the same problems dealing with the IRS. We just know what the rules are, what they can and cannot do,
Sure.
and hopefully we can make this as short, less painful as possible. Okay, but by all means, get tax professional help.
Sure. Now, are you at Nordlander CPA? Are you taking on new clients or anything like that? So if they have a known tax issue, can they come to you guys, or do you have other people that you can refer out?
It depends on what you need. If you need a tax return prepared, I don't do that.
Sure. Yep.
Honestly, I'm not interested in being an H&R Block.
Yeah.
If you have a tax problem,
Mm-hmm.
okay, then that's something that my firm does do, is deal with these large tax problems.
Sure.
And we're not talking about the $500 problem.
Sure.
That's not worth our time. Usually, if it's around $20,000-$30,000, it's probably worth the time to get some tax professional help.
Absolutely.
Because it becomes pretty substantial.
Okay.
But yeah, we do that. And if there is a need for recreating the books and records, remember, 6 years is the key, right? If there's a need for recreating the books and records, and that's something that we do as well, is to help create the books and records. We can get the numbers together, and then once we get the numbers together, the business owner can give it to our tax return professional, or we can recommend one. Let them fill out the forms.
Sure. Yeah.
But we'll get the numbers ready for them, and then go forward. But that's penalties we can deal with, IRS notices, IRS audits we can deal with. Anything big deal with the IRS we can do, but filing returns we don't do.
Gotcha. Okay. Thank you for letting us know. And what's the best way, if they do have a substantial tax issue, what's the best way for them to reach you?
Nordlander CPA is the best way to get a hold of me. Just go to my website and just Google my name, Robert Nordlander. You can find it.
Sure.
I have 3 books out there. People can read if they want to, if they're interested in it. One's about unpaid payroll taxes, how to deal with the payroll tax problem before it becomes a criminal issue, and what happens if it is a criminal issue. We discussed that during this podcast. The second book is another book's called Erase the Penalty. And because the IRS will penalize you first and never ask any questions, they're going to assume you're guilty. And this book's about how to get rid of the penalty, so your bill gets lower. What justifies that? And the third book is called Criminal Tax Secrets. It is for attorneys. People who have an accounting background can probably read it and understand it, but it's really how IRS evaluates whether or not something should be a criminal investigation.
Okay.
And the steps that they do take in order to prove the case.
Okay.
And the book goes behind the scenes about how the decisions are made, about what's a good viable prosecution and what's not.
Okay.
So it's
That would
kind
be
of really a niche.
Yeah, so it's kind of like an insider look into how they do all this. That's awesome.
Yep.
Really
Exactly.
good information. Well, Robert, you have been such a blessing, and I hope that you guys get a lot of information. Take this to heart. Again, I know this is a very sensitive subject for most of you out there, but we're just trying, again, help you remain in compliance and help your business succeed ultimately. But right now, we're going to go ahead and wrap up this podcast. Again, podcast episode 1 coming out hot. So if you are a grooming business owner and you found this information helpful, be sure to like and subscribe if you're following us on YouTube. If you're listening on the podcast on Apple and Spotify, go ahead and subscribe so that way you make sure you don't miss an episode. And if you want to dive deeper into the business education for groomers, then make sure you check out Groom House. There is a link below in the description, your go-to resource for mastering the business side of dog grooming. So again, thank you for listening, and we'll see you next time on Beyond the Shears. Thanks, guys.